and then kind of went a whole nother route with it. All right, so let me see if is this sharing? Is this sharing? Is this sharing? Because I want to go over a more recent case of this. I know we've gone over the market. I took you guys down trustydusty realtor.com so you can see what things are priced at and looking like now. But here we have the United States District Court, Middle District of Florida, Jacksonville Division. And in this case that was filed October 19th, 2023, it's the United States of America. Whew, that just sounds scary. Versus Ameris Bank. So let's take a look at it. We'll dive into it so we can go over some of this paperwork. But again, United States of America versus Ameris Bank. All right, this document was filed October 19th, 2023. Almost 100 years after they started the redlining maps that were created by the Homeowners Loan Corporation, partnered with the FHA. All right, so line one is the introduction of the complaint of redlining. All right, the United States of America, which will be referred to as the United States in this document, brings this action against Ameris Bank under the Fair Housing Act, which they'll refer to as FHA, not to be confused with the Federal Housing Administration, but the Fair Housing Act. All right, and they go over the codes and the Equal Credit Opportunity Act, which in banking we call it ECOA. So it's about it's been brought against them under the Fair Housing Act and the ECOA Act. Um, the FHA and ECOA prohibit creditors such as banks from discriminating in home loans or other residential credit transactions on the basis of race, color, national origin, or other characteristics. Redlining is one type of discrimination prohibited under the FHA and ECOA. Redlining occurs when lenders deny or discourage applications or avoid providing loans and other credit services in neighborhoods based on the race, color, or national origin of the residents of those neighborhoods. Notice it doesn't say based on the wealth, because redlining was really established based on race, color, or national origin. That's what it was designated and designed for. Like I said, this is to bring awareness. It's about bringing awareness, and we're going city to city, but we starting off with Duval, but we going city to city. So the rest of y'all is up on neighborhood watch next. The rest of y'all are up because this was very impactful. It's impacting people's economics today. So from 2016 to 2021, which they're deeming as a relevant time period. However, we notice the relevant time period goes all the way back to 1933. But we'll stay on code with the case. Ameris Bank engaged in a pattern or practice of unlawful redlining, as alleged in detail here, or as alleged in detail herein. Ameris avoided providing home loans and other mortgage services in majority Black and Hispanic neighborhoods in the bank's self-designated assessment area in Jacksonville, Florida, and it was called the Jacksonville Assessment Area, which we saw in the map legend. It was called the hazard zone. All right. But anyway, Ameris's redlining practices included locating and maintaining nearly all of its branch locations in majority white neighborhoods in the bank's Jacksonville assessment area. The bank's mortgage loan officers also targeted majority white areas to generate loan applications and avoided marketing, advertising, and outreach in majority Black and Hispanic areas. Further, although the bank knew its increased redlining risk in Jacksonville, Ameris failed to take adequate corrective action to ensure the bank provided equal access to majority Black and Hispanic neighborhoods. As a result of these practices, the bank generated disproportionately low numbers of loan applications and home loans from majority Black and Hispanic neighborhoods in its Jacksonville assessment area compared to similar situated lenders. Now, I don't know if they're just having Ameris Bank fall on the sword, because I do find it very interesting that other banks were just all doing everything correctly and big bad old Ameris wasn't. Um, Possible, yes. Likely, probably not. They just probably were more flagrant than the other banks, so they just picked the most flagrant aggressor, or the most flagrant participant as it compares to the other banks. Because I've worked for some folks, and it's not that's always the company particularly, but there's guys I've worked with that they won't do loans in certain areas just because they feel it's a headache. Because, like I said, you got to get approved based on your income, property, assets, and credit. And if they know these areas are deemed hazardous, they know it's going to be a hard time getting that loan to go through. Now, when I was a heavy hitter in the game, I didn't mind doing loans in those areas. I didn't look at it like that. Looking back now after over a decade, close to 2 decades, looking at it now, you can see what was unfolding. But when I was doing it, I didn't mind what neighborhood you lived in. Truth be told, a lot of those areas do have military vets that got 3 and 4 checks coming in. So income, they'll be good. Property is not that big of a deal as far as ownership value if we're doing VA. It only becomes a problem when they are looking to leverage the equity or ownership in the house for any improvements or other investment opportunities. That's when it can be a problem. But the other things you pretty much can work around if they're veterans. But let's get back to the case. I don't want to harp on that too much. Ameris's conduct and practices were intended to deny and had the effect of denying equal access to home loans to residents of majority Black and Hispanic neighborhoods in the bank's Jacksonville assessment area, which we're going to say the hazardous area. And those seeking credit for properties located in those neighborhoods, and otherwise discourage those individuals from applying for home loans on the basis of race, color, or national origin in the residents of the majority Black and Hispanic neighborhoods. The bank's conduct was not justified by a business necessity, and it was not necessary to achieve substantial, legitimate, non discriminatory interest. So it wasn't like they were only doing this because this was where it was best fit for business. This was a targeted, agenda based attack. So, jurisdiction and venue. The court has subject matter jurisdiction over the action under where these are the codes here. Feel free to reference for yourself. I'm going to jump into the rest because the action arises under the laws of the United States, and the United States brings this case as a plaintiff. So the United States found this. More than likely, the U.S. Attorney General picked up the case and decided to bring them to justice. So venue is proper in this court under 28 USC 1391, and in this division, because a substantial part of events or omissions giving rise to claims occurred in this district and division. All right, the parties. The plaintiff states the plaintiff Plaintiff, the United States, brings this action to enforce provisions of the Federal Housing Act the Fair Housing Act and the ECOA. The FHA and ECOA arise the Attorney General. I figured that Attorney General to bring a civil action in federal district court whenever he has reason to believe that the entity is engaged in a pattern or practice of resistance and full enjoyment of rights secured by the FHA and ECOA. The FHA further authorizes the Attorney General to bring suit where defendant has denied rights to a group of persons that denial raises an issue of general public importance, which redlining is definitely an issue of general public importance. Hence why I'm bringing this to you all today. That's why I'm bringing this to you all today. That's why I'm bringing it to you all today. This is important. All right. Defendant Ameris Bank is a state chartered financial institution that's headquartered in Atlanta, Georgia. And y'all on the radar too. subject to the regulatory field of Federal Deposit Insurance Corporation, FDIC. I'm sure y'all see it at the bottom of your credit card applications if you have a bank that's FDIC, and the Consumer Financial Protection Bureau. Hmm. All right. As of December 31st, 2022, nearly 100 years later, this is where we're at. This case is nearly 100 years later, but as of December 31st, 2022, Ameris' total assets were over 25 billion. The bank currently maintains 164 full service branches and 32 loan production offices across 9 southeastern and mid-Atlantic states. The bank currently operates in 18 branches in Jacksonville. In 2019, Jacksonville was the bank's largest market for residential mortgages by loan dollars. Ameris is subject to the FHA, ECOA, and their respective implementing regulations. Ameris is a creditor within the meaning of ECOA. So and is engaged in residential real estate transactions under the FHA. So, according to the Equal Credit Opportunity Act, they would be considered a creditor based on the line of work that they are participating in. And based on the Fair Housing Act, they would be considered a residential real estate transactions, is what they've been doing by doing mortgage transactions, extending mortgage credit. So, they would be governed and regulated by these acts. So with that, let's go into the factual allegations against Ameris Bank in the Jacksonville assessment area. I'm wondering if this is the only area that they have these accusations against them, or allegations. Interesting, they said factual allegations. So if it's factual, is it an allegation? All right, but as a depository bank, Ameris is subject to the requirements of the Community Reinvestment Act and its enabling regulations, which require that regulated financial institutions serve the credit needs of the communities that they serve. Each bank subject to the CRA is required to self-identify the communities that it serves as the bank's assessment area. All right, and the CRA is the Community Reinvestment Act. All right, Community Reinvestment Act. All right, and they need to actually self-identify the communities they serve. So they're able to now create their own identification of the maps. So they can say that they're not today utilizing those same maps. But it's interesting that these are still the same areas that are being underserved today. Like, what a coincidence that today, even though you self-assessed it and self-identified it as the Jacksonville assessment area, you still are not serving those areas that were deemed almost 100 years ago as hazardous. But anyways, from 2016 until July 2019, Ameris self-designated CRA assessment area in Jacksonville consisting of 3 contiguous counties: Clay County, Duval County, and St. Johns County. After a merger in 2019, which I'm sure this merger is where a lot of this got exposed, because whenever a company's merging, they got to look into your books, they got to look into your transactions, they got to look into all your actual factuals, and that's where they can see what you've been doing. They can see where all your mortgage call reports are going to, what areas they're in, and all of that. So after a merger in 2019, Ameris expanded its assessment area to include Baker County. All right. In 2019, the assessment area comprised of 246 populated tracts and had over 1.4 million residents in the Jacksonville assessment area. All right. According to data from the United States Census Bureau in 2019, the demographic breakdown of Jacksonville's assessment area was 61.5% non-white Hispanic, or I'm sorry, non-Hispanic whites. Make sure I get that right. So these are whites that were not considered white Hispanics, but non-Hispanic whites. 21.9, so 22% Black or African American, 9.1% Hispanic or Latino. These were more than likely the white Hispanics and Latinos because they're separating them from Blacks. Just to kind of break it down, when you do a mortgage application and we go over government monitoring questions. They ask you, if you want to identify or if you want to provide information for the government monitoring questions, and they'll ask you, are you white and or black, Native American, Hispanic. Well, they don't ask if you're Hispanic. They'll ask that as a part of your. They're going to ask what your race or national origin is. Then they're going to ask about if you're Hispanic or non-Hispanic, because they do have a classification for white Hispanics. They're still classified as white. However, their ethnicity would be Hispanic, well, white Hispanic. Um, like Canelo Alvarez, more than likely would be classified as a white Hispanic. Whereas Yasiel Puig or um, Sammy Sosa would be considered a black Hispanic because their ethnicity is from a Hispanic country. However, their race, they would classify them as a black Hispanic. Okay, just to bring that clarity, that's why that's separated on the government monitoring questions, which I typically choose not to respond to those. But it's your choice. I feel that those can directly and indirectly be a practice of racism by having those types of questions, because now you're documented like it is now, which it can help like it's doing now where you can see, but it can hurt because they can see and work around those areas. But anyways, 3.9% Asian and 2.9% two or more races, I guess mixed folks, which they would typically, that 3% will probably be tacked into the black or African American, because those are probably going to be considered non-white folks if they're multiple races. But they're breaking it down here. We're going to go off their breakdown. This is not my philosophy. This is how it's broken down. All right. The city of Jacksonville is located within Duval County, and contains a majority of the population within the assessment area. The assessment area's Black and Hispanic populations largely reside in Duval County. Yes, you're going to see more Black folks in Duval than you will in St. Johns or Clay County or Baker County. It's going to be highly concentrated Blacks in the Duval County county. The assessments areas Black and Hispanic populations largely reside in Duval County, where they account for 38.8% of the county's residents. So almost 40%. All of the 48 majority Black and Hispanic census tracts within the bank's Jacksonville assessment area are located in Duval County. Most of the majority Black and Hispanic tracts in the assessment area are located in and around Jacksonville, downtown Jacksonville, which Ameris describes as the area, as Ameris describes this area as urban core. So as you see, the Moncrief area, all those neighborhoods are near the downtown Jacksonville area, but it's on the other side of the St. Johns River. And they're classifying that as the urban core. Still hazard zone. They just got a new name for it, urban core. Still the hazard zone. Now they're just calling it urban core. They didn't renamed it because they're allowed to now self-identify. So they can say, well, we're not using the maps because we're calling it this. However, when you go back and you look at the maps, you'll see that on these maps, they're using the same, these same areas are still getting the same treatment. They're still squeezed out. This case, as you see right here, October 19, 2023 is when this was filed, and it's about them redlining. And lo and behold, the same areas that were redlined in the map that I showed you all earlier are the same areas that is in this case. That's not a coincidence. That's not a coincidence at all. So let's break down line 21. During the relevant time period, Ameris located its branches in its Jacksonville assessment area so as to serve the credit needs of residents in majority white neighborhoods and avoiding serving the credit needs of residents in majority Black and Hispanic neighborhoods. Ameris currently operates 18 full service, 18 full service branches in its Jacksonville assessment area. Ameris does not have and has never had a branch located in a majority Black and Hispanic census tract in its Jacksonville assessment area. even though the majority Black and Hispanic census tract represents nearly 20% of the overall census tract in the assessment area. So let that sink in and process. They've never had and currently do not have a branch in any of these hazard zones that were established back in 1933. They still do not have a branch in any of those hazard zones to date, even though we saw nearly 40% of the community of that county is Black and non-white people, and they don't have one bank in their area. Why would you not want to get any of that business? Why would you not want to do that? Right. In 2019, as a part of an efficiency initiative prior to a merger, Ameris closed two branches in census tracts that it identified as having minority populations higher than adjacent Ameris branch locations. Ameris did not close any branches in white areas of its Jacksonville assessment area as part of the efficiency initiative. One of the branches closed, the downtown branch, was located. One of the branches closed. The downtown branch was located within what Ameris referred to as the urban core. Let me explain something to y'all. And this is more of my out of towners. Everybody from Duval knows good and good dang unwell. That branch that's over there at the landing is not in the urban core, because remember, they said the urban core was the areas where they had a high population of Blacks and Hispanics. That downtown branch was at the Jacksonville landing. The Jacksonville landing is where the business district is, the downtown business district. That is not by Moncrief. That's not on Lim Turner, Edgewood. That's not on Dunn Avenue. That's downtown business district. And that's a slap in the face to say that that was a representation of them having a branch in the urban core. But they do state, and it was the closest branch, which that is probably true. That's the closest to those areas. But let's be real, though, that doesn't represent that area. Now, at this time of the closure, the downtown branch was rated as one of America's best financial performers. Of course, it was a big skyscraping building down in the business district by the landing, in the landing. All right, Riverside Landing. Now, prior to closing branches, Ameris performed an internal CRA analysis to assess the effects of the branch closures on the bank's CRA score, their Community Reinvestment Act score. All right, the CRA score is the FDIC's assessment of Ameris' compliance with the CRA, including the bank's obligation to meet the credit needs of the communities it serves. Ameris determined that both branch closures would have a negative impact on their CRA score. At the time of analysis, and when Ameris closed the branches, Ameris already knew that in prior years, the bank had originated 0 loans in most of what Ameris called the urban core. Now, like I said, I got 15 years in this space. I've worked with some folks that, you know, were, just for lack of a better term, they were non-constructive. And they didn't want to do certain loans for certain people. But to originate 0 loans, they literally closed 0 mortgages. That is disgusting behavior. That's disgusting. 0 mortgages. That's disgusting. Ameris knew, or should have known from its internal CRA analysis, that its branch closures would further deprive those same communities of equal access to credit services. After the branch closures, Ameris did not take any action to increase or supplement its outreach of advertising to the affected communities to ensure it was reaching majority Black and Hispanic communities and serving the credit needs of its entire community, except for one email campaign in 2019 where Maris sent emails to already existing customers living in majority Black and Hispanic communities. They sent out one email campaign. One originated zero loans. They didn't take a loan application. They didn't originate a loan application. Not one. And sent out one email campaign. It's disgusting. That's non-constructive. Those that need the most help should get the most help. That's balance between people. And when you're targeting a group to ensure they don't get help, you're practicing deceit and indirect violence. The remaining 16 branches, the remaining 16 Ameris branches were not readily accessible to the population living in majority Black and Hispanic community tracts. All but two of Ameris's branches in Duval County were separated from most majority Black and Hispanic communities by the St. Johns River. See, it will continue to reappear, the practice of this redlining. Ameris was aware and has acknowledged in internal documents that the St. Johns River is an impediment to providing service to customers and has found it not reasonable to conclude that customers could be serviced by a branch across the river. At the time of the branch closures today, the two Ameris branches left to serve the entire north and west side of Duval County are located at least 5 miles from the urban core where most of the majority Black and Hispanic neighborhoods are clustered. Ameris knew its branches were not serving the credit needs of the majority Black and Hispanic areas, and but did not take any steps to address this failure. So they were well aware of it and did nothing to provide a solution. They were aware of it and failed to provide a solution. That means this was intentional. This was intentional. This was intentional. This was intentional. They intended on letting these folks who were labeled in a hazardous neighborhood 100 years ago, they still refuse to originate one loan. This is in 2023. They refused to originate one loan in an area that was deemed hazardous in 1933. I'm going to sip a little more water because this is hard to digest. This is hard to digest. By concentrating nearly all of its branches in majority white areas in its Jacksonville assessment area, Ameris discouraged residents of majority Black and Hispanic areas from applying for and obtaining home loans from Ameris and restricted their access to banks' credit and mortgage lending services. Ameris relied on mortgage bankers who served majority white neighborhoods, but not majority Black and Hispanic neighborhoods in its Jacksonville assessment area. During the relevant time period, Ameris mortgage bankers served the credit needs of majority white neighborhoods, but did not serve the credit needs of majority Black and Hispanic neighborhoods in its Jacksonville assessment area. Ameris has a policy or practice of relying primarily on its mortgage bankers to generate residential mortgage loan applications by developing referral sources and conducting outreach to build local relationships. Mortgage bankers are not assigned to generate applications from specific geographic areas within the Jacksonville assessment area. So to kind of simplify that for some who may not be in the game, you have what it's called retail loan officers when you're dealing with the FDIC type of bank. And what retail loan officers are typically commission only, and they don't get a base pay, And they have to go find their own leads. It's called self-generated lead, or self-gen, as they'll say. They have to generate their own business, and the way they do that is by developing a referral network. So they'll build relationships with real estate agents by going to networking events, open houses. They'll also meet and partner up with builders in the area to be a preferred lender for that builder or that contractor. And they have to build their relationships that way. And then you have inside loan officers, which I've done both. As an inside loan officer, the mortgage company, like say you work for one of the big mortgage companies out there. I don't like to give out all the names, but it's more of a call center environment where you're in an office, you're inside selling. A lot of those are company provided leads, and you'll be in a call center setting, and the company does the marketing for you. And when they receive a applicant, they'll send them, or potential applicant, they'll send them. You get a ping on your phone, and you do the application that way. Those are an inside, so they don't necessarily have to go out and build those relationships because they're not retail. They're doing everything inside. Now, when you're a broker, you're more or less more so on that retail type of atmosphere. You're commission only. You're going out and you're building relationships and finding applicants that way. So what they're saying is, they weren't told you can only go over here, or they weren't assigned to just do applications other ways, but they were not supervised and told. So when you're building those relationships, which can be challenging, especially when you're dealing with folks like a contractor who doesn't have to be governed by the Fair Housing Act or ECOA, and they're like, hey, look, if you're a loan officer, I'm only dealing with white loan officers. They're not governed by ECOA, so they can they can say that. And sometimes they'll say that without saying that. So now you're only able to get applicants that aren't in those areas. You know, realtors aren't governed by ECOA. They're not governed by the Fair Housing Act to a degree because they're not a creditor. Now, there are bylaws and guidelines they have to adhere to prevent steering, which is something that it appears, if this was going on in Jacksonville through Ameris, then the realtors need to be looked at as well because they had to participate in steering. They had to. They had to participate in some form of steering. Let's keep it real. Let's keep it real. All right. Ameris mortgage bankers have unsupervised discretion to decide where to solicit applications. But at the end of the day, it still falls on the bank because they're representing the bank. The bank did not monitor or document where its mortgage bankers develop referral sources, or to whom the mortgage bankers distributed marketing or outreach materials to mortgage lending services to ensure that such sources or distributions occurred in all neighborhoods throughout Jacksonville's assessment area. In 2018, Ameris Compliance Department recommended to the mortgage division that its mortgage bankers build partnerships with local realtors and community partners to improve lending in high minority communities and low and moderate income communities, and that the mortgage division conduct and that the mortgage division conduct mortgage banker training. In response to the compliance department's recommendation, Ameris created a CRA. Hold on. And I'm sorry, it's not that I'm struggling reading it, but when the mortgage division hands out some compliance orders, there's a thing. I'm going to stop sharing this for a second. There's a website. Let me that I do want to share with you all. There's a